Okay, so we are at a stage that the euro dollar has become a lot stronger. So the euro has become a lot stronger compared to beginning of this year, compared to the dollar. Why is this such an important moment? What can you do to avoid further loss if you invest in dollars compared to euros? We are going to explain it today, aren't we?
Yes. And we are not talking about the quarterly figures of a lot of companies,
No.
because the internet is full of it, newspapers, financial channels. So we thought, okay, we try to, as always, try to use another angle on the
Correct.
financial markets. And what you said, it's a 1.12 euro dollar now, and that's an important moment. If you look back for the year, then it's on a high moment, because at the beginning of this year, beginning of January, it was trading at around 1.06.
Yeah.
So it became a little around 5% stronger. And again, we're not going to talk about the margin pressure of the Teslas, and that Tesla lowered the price of 25% this year on the Model I. We're not talking about the new AI module, it's called Ajax, I think, from Apple.
Yeah.
And that Apple became the first company with a value of
Yeah,
three trillion,
yeah,
a lot of money.
Yeah, and then also, I mean, that today also we are talking about it, but also just want to mention it because people were wondering why ASML base and all the other chip conductor stocks were falling. That was because TSMC gave a negative outlook. So we're not going to talk about that, but you know now why it is. We're going to talk about euro-dollar.
Yeah. Martin will give an example
Practical
from
example.
a portfolio with somebody with a certain amount in his portfolio, half in dollar positions, half in euro positions, and how you can deal with it in practice. This is really important. Okay, so this year, 5% up about, but if you look back, if you look at the chart of the euro dollar for 5 years, then you see that it's almost in the middle. The highest point was at the beginning of 2021, it is 122, again it's now 112. And the lowest point it was at Q3 2022, and then we dropped under the one, under party, it was 96.
Correct.
So we are almost in the middle. And if you also go back to the beginning of 2020 and the last part of 2019, then you see the 112, this, not exactly 112, but this the range where the currency is trading is a really important range.
Absolutely.
A lot of people, what did the US stock markets, how much did it went up?
I mean, if you look at S&P now at this moment, it's about 26% higher.
This year?
This year, yeah.
A lot of analysts and a lot of market followers think that the second part of 2023 will be not that strong, and then I'm really
But if
neutral.
if we keep this up, then you end the year with a 50% rise of the market. It's also something that I haven't seen happening so often.
No, so market think, okay, maybe we go down a little bit, maybe we still the same, but the growth of the first half of this year is almost impossible. You say so.
Yeah.
So
it's related to the interest rates, of course. And
yeah.
The next week will be important. We know a little bit more what the Fed will do, what the ECB will do.
Yeah. So if you have a dollar position and you live in euros, then you lost on your dollar position 5%.
Correct.
It doesn't matter because most of the companies went up and the S&P went up with 25%.
True.
So then it doesn't matter if you lose 5% on the currency. But if the markets go down for the second part of 2023 and you live in euros and you have a dollar exposure and you lose another 5, 6 or 7%, then it
starts hurting. Yeah.
Yeah, then it's hard.
Starts becoming awkward.
So that's why we want to touch up that subject, and Martin is going to explain in detail how you should hedge that. Okay, first I want to also to show you why it's so difficult, almost impossible to have a vision on currency pairs. If you look at JP Morgan, it was from February this year, they said in March we will reach 110, and then we will in August, September go back to 108 and we stay there. Wrong.
So they were wrong.
They were wrong. If you look at Deutsche Bank, they say this year it will go to 115 and probably next year will go to 120. Okay, that's another one. And if you look at ING, and they were quite well, they said 112 for the third quarter. Now this is the third quarter of 2023. It will go up 115, 118. So there's just a couple of examples, and you can go on the internet and you see all kind of big institutes and not small marketplace, big institutes that have opinions, visions on the euro dollar that goes all the directions. And we talked about a couple of weeks ago about the psychology of investing, and especially I think with this topic, it's also with gold. We mentioned gold back then, but it's also with currency. Yeah, don't look for the opinion that you have. How do we call it?
Yeah, the confirmation bias.
Confirmation bias. Thank you, Martin.
Yeah.
So don't do that with this currency. If you think I'm not gonna hedge my position because Morgan Stanley says this. No. Leave the visions on the side and prepare for yourself. Create for yourself a strategy. Yes, I want to hedge, or no, I want to hedge, or yes, I want to hedge for a certain amount. Okay, last thing I wanted to say about, if you look at the volumes, then maybe it has something to do with it why it becomes strong, because you see a strong trend. The last 50 days is a lot less than the last 200 days and also than the last 100 days on average day volumes on the euro dollar. So keep that in mind. Not a lot of volume means not strong directions.
No, and that's even more why it's important to think about whether you or not want to hedge. I mean, it's always the case. The best day to have done it is yesterday. The best day would have done if you done it in March, because then you would have already made some money on your FX position. But it is also quite complicated. So euro dollar, basically, it becomes stronger. That means that the euro becomes stronger against the dollar. The euro dollar price goes up, and it might sound logical now, but we're now at 111. So if the euro dollar goes up, it means that we go to 120. So the euro becomes stronger. You get less dollars, basically. Yeah. So how does it work in practice? Say, for instance, you got a portfolio of 200,000 euros, and you decide for yourself, okay, the portfolio is divided into segments: 50% Europe, 50% US, and you think you should hedge the total amount in dollars. I'm going to give an easy example. Then it's always possible, of course, to do 30%, 40%, 50%. That is totally up to you. But for the example now, it's more easy to understand that I use just half. Okay, so that 100,000 euros nowadays would give you a value. If you would say that in dollars, it would give $100,000 would give you a value of 89,411 euros. But what if the euro dollar goes to 120? At that moment, that same amount of $100,000, presumably your stocks are not moving. Your stocks don't do anything. They can, of course, go up and they can go down, but you neutralize this by buying what I'm going to explain to you now. If the euro dollar goes to 120, that value in euros is only 83,000. So what we learn from this is that if that happens, you lose almost 6,000 to 7,000 euros in value, and we live in euros. And your investment, I'm not talking here about what the stocks can do, because of course the stocks can go up 10% and then it's less, and then the stocks can go down and then the loss is even more. But what if you buy, in this scenario, a FX position, euro dollar, you buy it, so you go long in the euro, you go short in the dollar with the same purchase, right? It's one purchase that you do, one buy. You buy an FX euro dollar long for 100,000 euros value. That costs you in margin 1,000 euros. If that happens, then the total loss, or basically that you would make on your investments, I'm not, once again, not talking about the movement in the stocks that you own, just talking about the euro dollar here, is compensated, it's neutralized. Because, think with me, 112 to 120 is 8 cents, multiplied by 100,000, gives you, clear enough, 8,000 euros of profit on this position. Of course, if you keep your dollar investments and they don't move, then you lose that money, that value in your investments. If the stocks go down or whatever, I want to leave that out of this story today, because we can't make something up on that. But the most important thing here is you can't lose anything. You basically neutralize. You make off your dollars euros. You make. I say that correct, right?
Yeah, you know how much euros you get back with the same value.
Exactly.
In the dollar position.
Perfect.
And
right.
if the dollar can go up, down, but okay, you pin it at that moment.
Yeah.
You don't lose.
And if it starts moving the other way around, if we go back to the levels of the third quarter of 2022, when we go back to 1-to-1, then obviously you lose 12,000 on this Forex position. But if your stocks don't move, and please take this for granted, if the stocks don't move, then your $100,000 in dollar invested will not have lost anything in the value compared to the euros. And I think that is what you need to take from this. So it completely, what Casper says, you pin the price of your dollar today. And whether you do it for 10%, whether you do it for 50%, whether you do it for 100%, think about it. It's easy to do it. It's just thinking about the amount, 20%, 30%, 50%, whatever, but definitely worth doing.
It doesn't cost you anything.
No, the trade fees are free. You pay a little bit of interest, but that's not a lot compared to what you can make if it moves.
Yeah, and I think, investing is all about risk control.
Yeah.
And if you invest in a foreign currency, what a lot of investors, European investors, are doing, I think European investors invest more in dollar stocks than dollar investors in euro stocks. So you take an extra risk on board. It's also a chance, of course, but it's also a risk. And I think if you look at the market where the outlook for the second part is probably less good than, we can say that less good probably than the first.
Definitely.
So it will be a really difficult, it will be a shame. You have now a certain amount of money, a certain amount of value, and if the market goes down and the euro gets stronger against the dollar, you lose an extra. So we wanted to create awareness, what we also do in our courses. We have courses, especially about Forex. First, create awareness so you take that risk into consideration, and then you decide for yourself, because you know how you can hedge it, if you hedge it or not. And that's our goal, to create that awareness, to help you with it. And not a lot of people are talking about the euro dollar, more about the Apple Ajax AI tool.
AI things. And
but keep this also in mind, please. It's for you.
Thank you for watching, and we see each other next week.
Keep us with it.